Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Qantas is one of the most high-profile companies in the country, and over the last year, it's also been one of the most turbulent. Ouch. From record profits and sky-high fares to ACCC legal action over cancelled flights and the early departure of long-time CEO Alan Joyce, Qantas has occupied more than its share of headlines. Now, new boss Vanessa Hudson is trying to move forward with her own vision for the flying kangaroo. But how do investors see it? What do they like about the airline? What worries them? And what's the future hold? Remember, this is general information only, and you should always seek professional advice before making any investment decisions, including any investment in Qantas. Jakob Cakarnis is a Director of Equity Research at Jarden Australia. Jacob, welcome to Fear and Greed.
Thanks for having me, Sean. Good to be here.
So can you broadly frame the strengths and weaknesses of Qantas as we sit today?
Yeah, sure. I think it's as simple as having traded now through a lot of the disruptions, as you mentioned, from a restart following COVID-19. I think the company finds itself competitively on very strong footing, and the best way to encapsulate that is its dual brand strategy in the Australian domestic market. So they've got the premium airline, if you want to think about it that way, with Qantas, and then the low budget end with Jetstar. And then I think to a certain degree, it's still trying to find its feet internationally about where it fits in the value spectrum for leisure travellers and business travellers as well. I think coupling a very strong brand setting and strong consumer following in Australia, the company's done well also to repair its balance sheet, so undo a lot of the damage that happens when you don't fly as the network's set up to fly over the last 2 years, or through COVID especially.
Okay, so domestically then, it's probably in at least as good a shape, perhaps better, in terms of competitive environment as it was pre-pandemic. Is that right?
Yeah, I think, Sean, you could make a statement quite easily that it's in a better setting. And I think some of that also has to do with how competitors like Virgin have approached the market recovery. I think for all of them dealing with high demand, but also a recovering and increasing cost base has meant that they've all had to lean as much as they can on price. Naturally, that's going to be a part where they bump up against consumers. And I think some of the frustrations about ticket fares and availability, but also reliability of the network are warranted. But I think you need to remember also that there's a delicate balance that these airlines have where they need to make sure that they can continue flying and are also sustainable on a kind of midterm view.
I don't really want to go down the rabbit warren of balance sheets and profit and loss, but I am going to just a little bit put my head in the warren rather than run down it. I don't know a lot about investing in national carriers, for example, like Qantas. However, costs seem to always be a big issue. And, revenue and costs, better correct me here, Jacob, but I always kind of think of them as moving in tandem with each other. I don't know whether that's right or not, but I know that there's a lot of talk about Qantas's cost base. Can you explain that a bit better?
Yeah, of course, Sean. So one of the key tenets, I guess, of the COVID recovery was that Qantas were internally looking for cost savings. They told investors in the share market that they could find $1 billion of cost savings. As you rightly point out, sometimes the revenue environment and the cost environment do move in tandem. And I think for a full-service airline like Qantas, one of the biggest buckets that they need to carefully manage is things like staff and headcount costs. Obviously, managing external stakeholders like unions and diverse employee groups makes that a really delicate balance, like I said. The one that's also just as important for them is managing fuel costs. I think relative to the international airlines, with the exception of Singapore Airlines, Qantas is actually the best hedging airline for their fuel costs in the world. So they do get some advantage from that. But like I said, that balances out some of the delicateness of having to take care of their staff and make sure everyone's paid properly for the operating environment.
What about the fact that it is a publicly listed company and some of its competitors aren't publicly listed? In particular, the Middle East carriers, for example, certainly have government support. How tough does that make it on Qantas?
Yeah, I think in the forward, like you said, the delicate balance for Vanessa as the new CEO is that there's now a diverse range of stakeholders that she needs to manage. The ones that you talk to, shareholders, in the past, you could have argued quite easily that there was much more shareholder primacy. The latest performance is showing really that the company's trying to balance the needs of the external stakeholders like customers, government, and also maybe to an increasing but unnatural degree the media as well. Just along the veins of social license to operate, I think when Qantas has at periods compromised its social license to operate, it does make things like pricing decisions, which may be economic for shareholders, much harder to get from customers.
Jacob, you should be a diplomat, because I'm going to dive into what you just said then. But I'll be nice. So Vanessa Hudson obviously took over from Alan Joyce. The media piled on to Qantas and specifically Alan Joyce over some of the decisions they made. What you're talking about is kind of a kickback from that, though, isn't it? They have to pay more attention a little bit to that social license, to their PR, than perhaps they have previously because of what happened 12 months ago.
I think that that's a fair summation. I think some of the subtext of what I'm talking to is the $230 million investment in the customer.
Yeah.
Both you and I, Sean, could agree in a steady state. I don't think we'd see too many customers explicitly calling out investments in customers. So, yeah, I think some of the redress really comes through in the near term, lower profits for shareholders from that reinvestment.
Stay with me, Jacob. We'll be back in a minute. I'm speaking to Jakob Cakarnis, Director of Equity Research at Jarden Australia. So how do you think Vanessa Hudson has done in the first period? Also, there's been some other execs that have left the business, so a bit of a shake-up all around. How do you think management is at the moment?
I think transition's hard for any company, Sean. I think continuity, especially for airlines, particularly through the period that we've just been through, is so important. And naturally, there's going to be friction points in management change. I think if we talk to what we know so far, there's been no explicit change to the company's strategy. They were asked a lot about the margin targets that they put to the market under Alan's tenure about whether or not they'd still be achievable, and they haven't walked back from those. So I think investors will judge them on whether or not, although that a change in the personnel has happened, whether there is actually continuity in strategy and then performance from that.
So Qantas is spending a lot of money on new initiatives. You called out the $230 million, I think you said. A lot of that is about helping customers, but there's, sort of food and beverage and doing more on loyalty rewards and that type of stuff. It's kind of suddenly becoming a bit service oriented, and it's a ridiculous thing to say because obviously service has always been at the heart of Qantas, but they're trying harder in that area for customers.
Yeah, I think some of the glaring issues that they've had, particularly on lost bags, on-time performance, are things that would force customers over a long period of time to reconsider their purchasing decisions. And I guess what I'm saying there is when you're paying what is a premium price in the market, I think the expectation rightfully is that you get a premium service. And what we're seeing, a lot of that investment should flex and catch up the gap between the perception of performance and how Qantas perceived in the market by their customers and what customers are actually having in terms of a lived experience when they're boarding or waiting to board a Qantas plane.
A lived experience I want is a Sydney-New York direct flight. How far away, Jacob, are we from that? And I know that Qantas has boosted its CapEx bill to buy new aircraft, but it just looks like the long-range stuff's been pushed back a bit.
Yeah, it seems like we've moved to the right a little bit. I don't think it's anything meaningful as in Qantas are readdressing their plans for direct flying. What we get spoken to a lot about as investors or the broader investor community is how successful Perth-London has been for a direct point-to-point travel.
Yeah.
Where we are as an isolated island, the notion of direct travel is super appealing, maybe for certain types of customers. So let's say it's predominantly premium cabin orientated or those that have pressing time needs. How far away are we? It's a great question. I think for it to be economical, I still think we're talking about maybe 27, 28. So we talk fiscal years. So that would put us in calendar year 2028, 2029. It still does seem a little far away, but the technology's definitely enabled. It's about now getting the right awareness around the business, but also the physical capital, like you say.
What about the other stuff at Qantas? So frequent flying is one part of that. Freight is another part. How are they all performing?
Frequent flyer, Sean's probably one of the biggest discussions and points of contention for the market. And it has been a fantastic growth driver and free cash flow generator for Qantas. And I think it's fair in saying it's almost without rival in terms of a loyalty scheme and its profitability within Australia. But I think part of that's also its greatest weakness. And like I spoke about before, the investment in the customer, part of that will be in Qantas Frequent Flyer. And I think what we're looking for, and the investment community is when I'm addressing that, is how do they balance up the value proposition of points redemption for customers? So I'm sure you have done it. I've done the exercise as well. Is it just doesn't look as though your points go as far as maybe they have done in the past. So in order to retain that loyalty, which ultimately benefits Qantas from its capacity, its visitation, its preference as a brand over other airlines, is how valuable that loyalty program is to people. And I still think, and rightfully the company's addressing this, but there's still a gap to close to that articulated benefit to their flyers.
Okay. And then what about freight? We can't have an interview and not mention Jetstar as well. What about those two operations?
Yeah, why don't we start with Jetstar? I think it's one of the parts of the network that's maybe less glamorous than the international first class lounge and talking about a rapidly growing loyalty scheme. It sits at a perfect juncture in the market where it can go after the leisure traveller at a very low ticket price with historically very reliable on-time performance at a market position that's very hard for competitors and especially new entrants to address. So that's, for me, that's a jewel in the crown that kind of needs some polishing to become clearer. I think the investment community understands its value, particularly as a dual brand strategy, if we can talk to it like that, like I said, with the high-end brand. Mm-hmm. But that's going extremely well, and I think we'll continue to see strength from that business. Again, like all of the business, Sean, it can just see some of the closure of that perception in value gap, if you like, from people who are actually using the service.
Okay, and freight?
Freight's trickier now. We as analysts in the investment community don't get a lot of transparency of the financial performance of freight. The concern that I have there is that as more international competition comes back into the Australian markets, as borders open back up, and actually one of the biggest flex points will be potentially with lower fuel prices, we're going to see belly space, which is the space within the general air travel industry, open back up. And that will be harder for them to drive, I think, Sean, as an earnings driver moving forward.
Okay, so I think, am I right in saying, Jacob, that you've got a buy on Qantas? And I hasten to add to all our listeners out there, make sure you look after yourself and get professional advice before making any investment decisions. You have a buy. Why at the end of the day?
At the end of the day, we think that there's enough value from a investment fundamentals perspective in the share price. But ultimately for us, it's a well-positioned airline in a global industry that's historically been very competitive with a balance sheet, boringly, that's got a lot of capacity to withstand some of the volatility that you'd expect with an airline. And that's things like being able to withstand shutdowns from COVID-19 and also competitive volatility, like you said, from Middle Eastern carriers or any other entrant that sees the Australian market as attractive from a profit pool perspective.
Jacob, thank you for talking to Fear and Greed.
Thank you. Thanks for having me.
That was Jakob Cakarnis, Director of Equity Research at Jarden Australia. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.